Matt, there's a
All
message
right.
at the top that says updates not installed. Is that yours?
Yes. All my other notifications will go to the other screen. All right, I think it's time to get started. Thanks everyone for joining us tonight and this morning, depending on where you're located. We're going to talk about US Nexus and sales taxes. And go ahead and get started here. So I'm going to introduce you to our panelists. We have our CEO and fearless leader, Bruce Phillips, and our director of tax, Laura Ring, with us tonight. And we'll go ahead and cover some introductions and housekeeping. At HPC, we're a cloud accounting, tax, and advisory firm. We've been around for over 24 years. We focus on providing accounting, virtual CFO services, tax, and we do a lot of work with technology and add-ons, and we're a Zero Platinum partner. We're also a virtual company with staff in 16 states here in the US, and you can learn more about us at hpccpa.com. And we also have a website dedicated to global businesses trying to get started in the US at hpcgoglobal.com. So some housekeeping. Our webinar, we're going to definitely try to stick to 30 minutes. Everyone's on mute, but we definitely encourage you to ask your questions in the question box you should see at the bottom of the Zoom webinar. And we'll also be recording this webinar and passing along slides and the recordings to everyone that joined us today and the folks that weren't able to join us but were able to register. So we definitely want to share our advice, but definitely with U.S. taxes, and you'll learn as we go through U.S. Nexus and all the state rules, you're definitely going to want to get advice from your tax individual because every situation is different. So I'm going to go ahead and hand it over to Bruce and Laura to get us started.
All right. Thanks, Matt. So we're going to start today to kind of just talk a little bit at a high level of, what is sales and use tax. And I think that, when people talk about sales tax, they think about it's basically just tax on something, when you sell or when you buy. And that's actually not the case. They call it sales and use tax because many of the states actually get their money in such a way that they will tax goods when they come into their state, even if they're not bought in their state. So basically at the bottom line is when you hear about sales tax, it's not just a sales tax, it's actually a sales and use tax, but it is based on sales. And that is actually different from like a VAT. And a lot of times you hear, especially the politicians, talk about additional ways to get revenue. And VAT stands for value added tax. And as Matt alluded to, we actually see a lot of companies come here from overseas, particularly UK and Australia. The taxes work very different over there, where value added tax actually taxes value that's created along the way of the process. So it kind of goes from a raw material to a work in process to a finished good, and there's a tax every bit along the way. So it's not based on the sale, it's actually based on the value add. Very, very different. Everybody pays it. There's not exemptions like there is here. We get a lot of questions when people come from overseas and that, well, what is your sales tax? We have a VAT. And the other thing we get is we get people in the US who are selling overseas who are like, well, do I need to collect and remit VAT? And basically we tell them, you need to talk to your advisor overseas because we're not VAT experts, but typically you don't have Nexus where those taxes would have to be remitted. And we're going to talk about the definition of Nexus in a little bit. Laura's going to do that. But again, the bottom line on that is that in the US we have a sales and use tax, and overseas generally it's a value added type tax. And the last thing is, and in generalities is, why in the world does it matter? And I'm going to let Laura answer that. So fire away.
Thank you. So, why it matters is really partly a business decision that you need to make. We think compliance is very important. We encourage all of our clients to be compliant, but it's expensive. And as we start to talk about Nexus, and if you're using Amazon, for instance, the number of places that you need to do this can really start to add up, and as can your compliance costs, even if it's your time that you're taking to do this. The biggest reason we usually see companies get sort of 100% compliant on this is if they think they want to sell their company. And this compliance matters a lot when you're trying to sell yourself to somebody else who will actually have you kind of answer a questionnaire and fill out some disclosures saying you're compliant everywhere. And you can't answer this one correctly or accurately and say you are compliant if you don't follow all these rules. So it seems kind of like a nuisance, and it doesn't really matter. It's a small percentage and things like that, but it really matters at that point. And that's why we have that conversation about business decision and all of that based on what you think you want to do with your company going forward. So that's kind of why it matters, and why we think people should be paying attention to it, and why we get so many questions, especially from those companies that know that's going to be their exit and that's what they plan to do.
Not to mention, the last thing you want is a huge notice coming from the state saying, yeah, we're looking for the money that you collected and remitted, and you didn't do it.
We'll jump over to the next slide here.
So this is an interesting slide. And one of the things that we want to get across today is, sales tax in the United States is very, very complex. And there's a few different reasons why it's complex. And one of which is that we have 50 states and every state makes their own laws. So sales tax, some states don't have sales tax. Some states are based, on the origin of the sale. Some are based on the destination of the sale. And more importantly, within at least, I remember when I used to do the Georgia, sales and use tax returns. I don't know how many counties there are in Georgia, but basically there's different rates in the different counties. And then this county adds a 1%, option for hotel tax, and this one adds that. And basically it's really about how they choose to raise their money. And then they basically put the burden of compliance on the filing of the returns. And of course, if you're going to file the returns and you have different counties, you have to track your sales by counties because you have to fill out the returns. So I remember doing, one in Alabama, and I was talking to Laura. I don't remember how many counties there are in Alabama, but it's crazy. I want to say there's like 100 different jurisdictions just in the state of Alabama. So, so I guess the moral of the story here is that sales tax are very, very complex. It's almost impossible to know all the rules, but obviously there are, I guess there's tools available to help do some of that. There's research, obviously that we have access to, so we can look up and know what the rules are in each state and what the rates are in each state and who needs to collect what and when you need to remit. But basically, at the end of the day, sales tax is very, very complex in the U.S., and that's why you probably don't want to do it by yourself. And in most cases, want to reuse, and if you're going to do something, you want to basically use one of the tools that's available that we're going to talk about in a little bit. So I love this map. So
Definitely. And this map was put on by one of our partners, actually, TaxJar.
Also.
Yeah.
One of the tools.
So I'm gonna flip over to the next one here.
So what we're going to talk about now is what impact does it have on you? And as I think we're talking to, we could be talking to small business owners, but I think mostly we're talking to advisors, accountants, and bookkeepers, some of which are in the U.S. and some of which are overseas, helping their overseas clients. But one of the questions, and I'm going to ask Laura some questions here, and she's going to chime in. But one of the first things is, how do you know when you need to collect sales tax? Just using a piece of software, so you open a business and it's like, well, I think I might need to collect, but I'm not sure. And given the fact that the rules in every state are different, and the rules with regards to what you're selling make it different. Some states tax software, some don't. Some tax goods, some don't tax food. Some tax this and don't tax that. And how the hell are you supposed to know, what you're supposed to do? So how does it impact you? As a business owner, you have to, it's the worst situation you can ever get. And then I've seen some of my clients get into this, is that you don't collect it. Then you get caught and you can't go back and get the money and add it to the sale. I've seen that happen in the construction business several times, where they didn't charge sales tax on the goods, and then they went through an audit and had to remit and do that. So the biggest thing what I want to focus this slide on is basically, you know, what is Nexus and what are triggers for Nexus? And I'm going to kind of turn it over to Laura and let her talk about some of the things that just for you to be aware of. Go ahead.
Sure. So Nexus, and this is where it starts to get a little bit confusing, especially, and we're going to talk about this in a second, when it comes to Amazon. You may not even always know where you have Nexus because of the fact that who might be helping you with your fulfillment might have warehouses or storing inventory in a number of states around the country. And in almost all cases, if you do what's called a Nexus review, and that's something that we do a lot for our clients, one of the things that's the biggest way to create Nexus in a state is if you physically have a presence in there. And inventory and storing your inventory is definitely one way that you can do that.
Why don't you define Nexus? Can I go backwards for a second just so everybody understands?
Yeah, sure. That's a great point. Nexus is what creates and sort of is what sort of puts your, and I talk about it as like your footprint. Sometimes you're putting a toe in there. Sometimes you're putting your footprint. Sometimes you're really there. And it's what is it? It's sort of the stamp that you're making within a state that then triggers other filing requirements. Now, today we're talking about sales tax because that's what this focus is. But of course, this Nexus discussion impacts whether you might have an income tax filing, a registration filing, and it kind of creates additional layers. And that's why it's really important to kind of think about this. And, you know, you find somebody who's going to be a great salesperson for you, and so you want to get them involved and all that. And it doesn't matter, oh, they happen to be in a state that's not mine, but that's okay because of technology. Well, now all of a sudden you have somebody who's an affiliate of your organization, and now you have Nexus in that state because, you know, the states don't really care if they're an employee of yours, a contractor of yours, an affiliate of yours, a sales arm of yours. If they're kind of connected and working on your behalf, all of a sudden you have Nexus. And so all of these different ways that you can create Nexus are the reasons that we want to really understand how you're going to run your business and what you're going to do so that we can make sure we help you make the right decision on where you want to be compliant. You'll see there that we have noted kind of click-through Nexus. And the states are actually really trying to help out, you know, retailers and sellers because they know that no one is going to be 100% compliant if it's too onerous. And so they've actually started to kind of create some bars. And in most of the states, there's a few that have gone below this, but almost all of the states are saying, if you have more than $10,000 of sales in our state, we're kind of saying that's a bar that we then want you to be compliant. You know, you have an occasional sale in the state. That's not really something any of us want to do the paperwork for. But if you start to be consistent with that, that's really where we need to start to pay attention. And I think that's kind of a good rule of thumb. And that click-through Nexus means, once again, you're using somebody to help you fulfill your sales, or you're using someone to help you fulfill your orders, and it's kind of clicking through, it's pushing through the Nexus that you might on your own just by yourself be creating. And yeah, Matt, you can go to the next slide if you want to.
Well, actually, I want to add something on the Nexus just for a second. So I think it's important, you know, when you talk about the click-through, is a lot of our clients that come from overseas have to make a decision. Do I want to sign a distribution agreement with a company and basically sell the stuff to them and then they resell it? Do I want to have a sales team here, hire a sales team, and then basically they're going to sell my inventory that I'm going to ship in from overseas, whether I ship it from my warehouse or I have it made in China and ship it to the US. Then I have to figure out where I'm going to hold it in the US, and that could be in a fulfillment center. It could be in Amazon. But all these decisions potentially create, you know, can create all different kinds of Nexus. And you know, to kind of dumb it down, the way I like to say is, it's basically sales, property, or people, and that's a real generic kind of way to look at it. But you know, sales, or do you sell into the state? And of course, we said all the nuances about it. Does it originate there? Does it deliver there? Does it go through there? Mm-hmm. Sales, property would mean, do you own a building? Do you own real estate? Do you rent? Have an office? Those would be things that would create it. And then the third one is people, and that would be basically, do you employ somebody? And as Laura said, it could be nothing just an employer, it could be a contractor doing something on your behalf. So those are the kind of things that can cause triggers at a high level to think about the whole you know, Nexus discussion, which doesn't just relate to sales tax. It relates to all those other things that Laura talked about. So, all right.
All right, move over here.
Good. So Laura, I'll let you kind of talk about the whole Amazon and the whole fulfillment and how it affects clients and what you have to be, you know, wary about with regards to this.
Yeah, and I mean, there's very few retailers out there that don't want to think about using Amazon, of course. I mean, they're the ones who have created the marketplace. They have folks coming to their site. And so obviously you don't want to try to do this without Amazon. But Amazon adds a lot of complexity. And this, the warehouses that they have, there's a couple of different issues with that. You don't actually always know where your inventory is because they move things around based on whether they think that's where the sales are going to come from, storage, all sorts of different reasons. So you may think, oh, they're only going to have it in these 2 locations and I'm going to get registered and I'm going to be compliant there. But then they can end up moving it around. And the next thing you know, you could be in 10, 12, 13 different states and trying to be compliant. So that's kind of the decision that you have to make. If you decide you're going to use Amazon, and most people do end up making that decision, then you kind of need to decide whether you want to be 100% compliant or not. And if you do decide you want to be 100% compliant, we can certainly help you, as can others, to do that. But you're sort of really deciding that you're going to kind of put your full foot into these states, and you're really going to do all the things you need to. And that means, getting registered for your sales tax license, actually collecting it from your customers, and then remitting that on whichever basis you need to. Usually that can be quarterly. A lot of our clients were able to get onto an annual compliance, so it's not too onerous for them. But sometimes if you have a lot of sales, it could be monthly that you're having.
Based on volume, right?
It's based on volume, exactly. So
quarterly or monthly.
Yeah, it kind of depends then, what you're going to do. Now, there are some folks who decide they don't want to be involved with Amazon, but they're not going to be storing the inventory and fulfilling orders themselves. They have to outsource that process, either because that's not where they want to focus their time, or it's just too big of an effort to take on. And so those other solutions, they also create their own Nexus. They might have 3 warehouses throughout the country. They might have 5. But once again, whether it's the 3, the 5, the 10, or the 13, you still have to decide if you're going to be compliant. And then you have to do all those getting registered, making sure you're collecting the right amount based on what's going on in that state, and then remitting those. And that's kind of where all that confusion comes in, and why it matters. And if you do decide, Amazon's got some great tools and they can help you, but they won't conclude on anything for you because they kind of want to stay away from that. And they won't really sort of point you in a direction. You really have to figure out your own tools to do that, because they kind of have to draw a line on what they're willing to do and what they're not. And you can understand that, but it does get a little overwhelming if you're just starting the process. So that's kind of the whole fulfillment piece, because if you don't get it into the person who's purchased its hands, it sort of doesn't matter that the sale's been made.
Are we ready to move to the next slide?
Yep.
I think that's
Awesome.
that's that.
So here's a list of, and for most people on this call, I would imagine, understand that we're a Xero partner. These are 3 of the tools that we use that they don't only work with Xero, but they all do work with Xero. Avalara, TaxJar, and Taxify, and I believe they all do different things, but they can be used either directly from a client, like a small business can use it, or basically they can use it through their accountant, like us. In many cases, we'll take care of the compliance for the client, and we'll basically include this in our stack, of software and tools that we use. But basically, at the end of the day, you have to decide what's best for you. They each do things a little bit differently. They're priced differently, and I think the whole sales tax, software is evolving. I don't think 1 or 2 of them were even around a couple years ago. So, and as Laura said, compliance is really complicated. So if there's a tool out there that's going to make it easier for your small business client and you to be compliant, you're going to be more likely to be compliant. And that would involve everything from calculating the tax, making sure that you collect it, compiling it, and allowing you to file the forms relatively easily and remit the money. And then that's basically what these things do. I think, and maybe Avalara also provides, don't they have like a back-end research kind of thing with a lot of information with regards to being able to actually research some of the things that are that you might need to know to maybe to make those decisions if you were going to try to make them by yourself, which we're saying don't. Anything else you want to add about the software?
Yeah, I would say that each of these solutions are great solutions. Part of the decision on which one you'll use will also be dependent on how complex your situation is, because they do different things, and their pricing, of course, is very different. And so as you're thinking about that, think about not only what you might need now for the next, say, 6 to 12 months, but what you might need after that, because it does take time, obviously, with any of these kind of tools to get them set up. The last thing you want to do is get it set up, figure out how to use it, and then, say, 12 months down the road, have to make a big switch because your situation got more complex. The pricing wasn't really what you were understanding it was going to be, and that can actually have a really big impact on the time that you spend on this process. So I would really kind of think about that from the longer term. And all of their sales folks, as you can imagine, are great at helping you figure that out and figuring out which is the kind of the right solution for the needs that you have.
I think the only thing I would add to that is, Laura and I were talking about, getting them set up correctly. Mm-hmm. And, I think the interesting thing is when you don't understand why they're asking the question that they're asking, it's very likely you're going to answer it incorrectly. And when you answer it incorrectly and it gets set up incorrectly, it could have cascading and long-standing impact on getting things right again. And sometimes it takes a lot more to get things right after the fact and correct them as if you had done it correctly in the first place. So just something to think about is that they don't help you and tell you how to set them up and what every question means. And if you don't really understand what you're doing, you can really make a mess of it. So.
Yeah. And then, of course, the outsourced solution is just like you might decide to outsource other layers of tax, income tax, and things like that, where you definitely know what you know and definitely know what you don't know. You decide that you're just going to kind of push that off to a firm like ours or another accounting or tax firm who really understands the rules, can help you stay compliant, can make sure things are set up right, and kind of do all of that, so you don't really have to think about it as much, and you can just be sure that you're compliant. That's kind of the two big choices there that you have.
Great.
I wouldn't recommend, there have been some folks that have asked me, because you can file online with the states, do you really need to use a tool? I would not recommend doing this without a tool. It is very, very difficult to get the right information. You'll spend a lot of time doing that. Even as wonderful as Xero is, it doesn't give you the detail and granularity that you need to be able to do these filings. And so don't do it without a tool or a partner, because it's just too confusing. And if you get frustrated and you don't file, once you're registered with the states, you kind of lose your ability to go back and file it, what's called a voluntary disclosure, because you've registered, you just haven't complied. And so that tells them that you knew you were supposed to be compliant, you just chose not to, and that just really limits your options. So don't sign up and don't start until you're ready to actually be compliant and do that.
All right.
Awesome. I think that brings us to questions here.
Great.
So I do have one question over here. If you guys want to post some more questions, definitely we have the opportunity. We'll be around for a few more minutes here. And if you have any questions after the webinar, we'd definitely be happy to take them and get back to you or set up a call. But the question I have over here is, what if I am selling on just Amazon Marketplace and not FBA?
So does that mean that they're fulfilling themselves? The fulfillment is kind of the issue.
I think the idea with the marketplace is they could use a 3PL. They could be fulfilling it, but they're selling like they would any other online sales channel. I think
this would be, there could be two answers to this. One, eventually who is fulfilling your orders is a big part of what creates your Nexus, because where that inventory is stored is what creates.
That's right. The issue is where is the inventory? That's what's going to create the Nexus. So if you're just using the marketplace and you have your own warehouse and you're just using them as a sales channel and accepting orders and whatever, if that's what it is, and you're maintaining your own inventory, then basically your Nexus is going to be where your inventory is.
Mm-hmm. Yeah. The only other thing that it could be also is that click-through Nexus we were talking a little bit before, and that could also depend on just how much volume you have. Once again, none of the states are going to come after anybody if you're doing 2 or 3, sales a year and you're the state. That's not really what they're looking for. They're looking kind of for the consistent salespeople and things like that. So that would also be dependent on what kind of volume that they're talking.
Are there different states that have different rules regarding the click-throughs too?
Of course, yes, because the states don't want to be consistent on anything. So not only do they have different rules, but they have different bars that they set for how important it is to them that you actually comply then.
Good question.
Another question here. Can you talk about the difference between sales to consumers and then sales to corporations? That's from one of our partners in New Zealand.
Yeah, that's a really great question. And we didn't really talk about what's called a reseller agreement.
Yes.
And what this means is, in the United States, we tax on the final person who is making the purchase. So that could be, the consumer at home. If somebody is buying your product because they are going to resell it, then you don't want to collect the sales tax from them because they're going to collect the sales tax from the ultimate user. And so what you do is you get what's called the reseller agreement from them.
That's like an exemption. That's an exemption certificate, right?
Yeah, very similar. And what it does is it lets the state know, I did make a sale and I'm recording it, but I didn't have to collect collect the tax because XYZ company is going to collect that on your behalf. And so you kind of pass it along. In almost all cases, when you're filing your sales tax within a state, and this kind of ties into the income tax side too, you start with what your total gross receipts are. So they want to know how much sales you had overall. Right. And then there's all these exemptions that you get.
So that's like a part of the exempt sale line, right? This shows that
and
sales of $1 million, but it was all, we have reseller exemption certificates. Therefore, it's $1 million, less $1 million, our taxable sales are zero.
Zero, exactly. And so that's a really important thing to get. And it's important to make sure that you keep track of that, because if you don't have those and the state comes back and says, well, why didn't you collect it on this? You won't really have anything to lean back on and show them why. So that is great. That's a great question. That's a good thing to remember.
Awesome. Well, for the sake of time, I think we'll move on to wrap it up here. So thanks everyone for joining the webinar. We do try to put on a webinar just about every month. Next month, we should be actually focusing on another partner of ours, T-Sheets, as well as what we do a lot for professional services. And another small topic in there, we'll cover a little bit about FLSA, which is a huge change. It's going to be changing the payroll rules here in the US. It's going to impact a lot of employers. So we'll be covering that next month. We'll be sure to invite everyone that joined us today. And then we do have a guide for folks that are trying to expand into the US on our Go Global website. And we try to house a lot of our content, like the copies of this webinar and a lot of other helpful content for people trying to expand to the US. But that guide, there's a lot of good stuff in there, including some things about sales tax and Nexus. So if you want to read a little bit more, that'll be a great place. And then, just thanks for your time, and definitely follow us on social media. Check out our website. And another thing, we try to post all this on our blog, and we do quite a few things on our blog and on social media. So you'll find some other helpful content there. And so I think it's time to wrap up. Thanks again, and we'll send you the slides as soon as we can.
Nice job, Matt. Thank you.
Thanks, Laura. Thanks, Bruce.
Bye.
Yeah,
All right, bye-bye.